Okay, hi there and welcome to the second session of 6 in our series of Head Start videos designed for Year 11 students who are moving into sixth form economics in the weeks and months ahead. This is a series of 6 sessions that I've been teaching to my own students covering aspects of the economics of the coronavirus pandemic. In the first session, there were 3 videos on the introduction to micro and macro and aspects of a fast-changing world economy. In this session, there are 3 new videos looking at the impact of the crisis on different businesses and industries, and crucially, who's losing, who's gaining, and how are businesses responding to the crisis. Welcome to the first video, which looks at businesses and business under pressure. There's no doubt that there is a severe economic shock affecting both the UK and other economies. Take a look at this fan chart showing the projected growth of GDP for the UK this year and into the next few years. It's falling below zero, the growth rate. We are in recession. The darker the colour on this fan chart, the more likely is the projection. Of course, there's the big risk of a significant double-digit fall in GDP. Projection is that world GDP, the global economy, will shrink by over 3% this year. That is a big fall in GDP, bigger than the world economy in the financial crisis a decade or so ago. The closest parallel is probably the Great Depression. Now, clearly a macroeconomic shock of this scale and size is going to impact on every business, every industry. So in our first video, we're going to take a look at this question: which industries, which sectors have suffered most during the crisis? And here's a chance for you to press the pause button and have a think and perhaps jot down 5 examples of sectors or industries that you think have taken a hit during the crisis. Take a few minutes to do this, and then when you're ready, just press the play button, and I'll give you a few examples of my own when you're ready. So which sectors do you think have suffered during the crisis? Here are my 10 examples. Cruise ship operators clearly are really struggling. Not many people would be willing and able to go on a cruise in the next few months. The hotel sector has suffered as hotels and Airbnb and things have shut down. Airlines under enormous pressure, closing down their fleet. And of course related airport services, the industries that service airports such as Heathrow and Gatwick. Restaurant businesses without any capability to offer takeaway have suffered as they've closed down. A lot of supply chain businesses feeding other industries. If you're a textile producer, clothes shops have closed down. If you're a meat processor, restaurants have closed down. So there's been quite a big negative for supply chain businesses. Construction sectors, many companies have shut down production initially because of social distancing. Cinemas and theatres have clearly closed down, taking an enormous hit. The cancellation of exams has been bad news for exam tutors. Lots of Year 11 students really looking forward to a summer festival post GCSE exams, but summer festivals have by and large disappeared from the calendar. And of course gyms and leisure clubs have also had to close down, similar to cinemas and theatres. So there are some good examples of industries and sectors that really have suffered a big fall in sales, in revenue, and taken a big hit. The next question is to think, how have businesses responded to help weather and absorb this storm? Again, perhaps press the pause button here and jot down 3 examples perhaps of what you think businesses have done to weather the storm. Here are 5 of my ideas. The first one, of course, is that many firms have shut down production. Car plants have had a temporary shutdown. There have been the shutdowns, of course, of cinemas, of theatres, of many retail stores. Some businesses have laid off their workers. Others have furloughed them. This is where you keep them on the payroll, but workers become inactive within the business, but the business is able to benefit from a government wage subsidy. Some businesses have pivoted production. They've shifted their production. So some restaurants have moved to takeaways. Some beer producers are now starting doing lots of home deliveries. Some businesses have pivoted production for social purpose. So Burberry is now making gowns and things for the health service. Ineos and the beer maker Brewdog have pivoted production towards making hand sanitizers for hospitals and care homes. Pivoting is quite an interesting idea, and I'm sure you can find some good examples in your reading. Other businesses have attempted to increase their online e-commerce capacity as a way of sustaining sales. And crucially, this is something we're going to think about in this video, a lot of businesses under great financial pressure have chosen either to raise fresh equity by going to their shareholders, or they've gone to the bond market and tried to raise some money through debt finance. So raising equity is the issue of new share capital. And here's a good example: Expedia Business, major global travel business, raising over $3 billion of fresh capital in a fight to survive. Other firms, of course, have tried to cut their costs. British Airways has announced over 10,000 job cuts in a bid to reduce their payroll as revenues have collapsed. And we're going to look at this in more detail, but a lot of businesses are seeking new debt finance. Legoland has turned to the bond market for a lifeline. Private equity-backed Merlin has tried to raise some new debt. And presumably if they can get some debt, that will give them something to build on. What's really important to understand is the significance of cash flow to a business. Most businesses fail because they run out of cash. And here are 3 ways businesses are trying to cut their outflows. Some firms, under pressure, have delayed or cancelled their dividend payments. I was reading that Shell, the oil giant, has decided not to pay a dividend for the first time since 1945. So holding back the money that you distribute to your shareholders to preserve cash. Primark and other businesses in the retail sector may be delaying the payment of rent to shopping mall owners, for example, deferring quarterly rent payments, again to conserve cash flow. And some businesses, of course, have furloughed staff and decided to close stores. Certainly in the initial stages of lockdown, some retailers now reopening on a trial basis. But furloughing your staff is a way of reducing employment costs and take advantage of the government employment retention scheme. Raising debt, going to the bond market, is becoming increasingly a very common tactic that firms are using, particularly firms who are already listed on the stock market and who have the ability to go to the bond market and raise extra money. So Delta tapping the bond markets for $5 billion to replace cash, and Yum Brands, which owns, for example, KFC and also Pizza Hut, they've tried to raise $600 million in their first bond issue in recent weeks. We're going to look at the bond market in more detail, but it's a good example of how a business has tried to respond to the pressure of the economic crisis and the collapse in sales and revenues.